Hello, everyone. I'm Barbara Ham Lee. It's the beginning of the month, so have you already paid your bills? Do you have enough for savings, the rent or mortgage, utilities, food, car note, entertainment? Or are you like nearly 40% of African American homes that have zero or negative net worth? When was the last time you took a serious look at your finances? Up next on Another View, financial expert Christy Hunt joins us with practical advice to help us either become financially fit or stay financially fit. Another View is next, so stay tuned.
Discussing today's topics from an African American perspective, this is Another View.
Good afternoon, everyone, and welcome to Another View. I'm Barbara Ham Lee. It's a subject that people approach with ease or trepidation. I'm talking about your finances. Listen to this statistic. According to an article in Slate.com written in 2015, the median white family had a net worth of $116,000. The median black family had a net worth of $1,700. Now, there are lots of reasons for the disparity in wealth between African Americans and whites, but at the end of the day, we have to deal with the money we have, and that's where our guest today can help. Christy Hunt is a financial expert and housing program manager for the Urban League of Southampton Roads. Christy, welcome to Another View.
Thank you for having me, Barbara.
I am so excited because I think a lot of people can use this. Now, we are going to go to the basics today.
Yes,
We're not talking about investments because that's not your wheelhouse, correct?
Mm-hmm. Yes.
Okay, so we're talking about the basics of how to put together a budget, how to live within our means, etc.
Exactly.
So what are some of the major mistakes that we all make in terms of our finances?
Most of the time, the major mistakes is we spend too much money.
That's pretty straightforward.
We do not have a budget, or if we do have a budget, we're not following it. We're not really aware of what's coming in and what's going out. And when most people sit down, whether it's with their bank statement or their own budget or their Excel spreadsheet, whichever they're using, it's a big eye opener.
Mm-hmm. So if we want to start to look at our finances, what's the first thing that we should do?
The first thing we should do is just kind of sit down, look at our income, all of your income, whether it's two house income, one, and then look at your expenses, look at your bills, and kind of see everything that's coming in and what's going out. But you have to start with putting a plan in place first. But by doing that, you have to know what's, like I said, coming in and what's going out. Then you can go ahead and start that plan. So
some people say, well, it gets kind of confusing because I get paid every other week, and my husband may get paid once a month, and how do you? So you're saying just sit down with a piece of paper and just start with the numbers first, not worried about how it's going to be dispersed at that moment, but what's coming in, then write down every single bill. And what are some of the things that we forget about in terms of a budget?
When it comes to a budget, most people forget about the small gas. Most people forget about gas. That's part of your budget because you have to put gas in your car to keep traveling. Right here in Hampton Roads, most people forget about tolls.
So you really are talking about down to the penny in terms of everything that goes out of the budget.
If the individual or we are to that point to where we have to figure out where is my money going, yes, we have to go all the way down to the penny. We forget about eating out. We forget about if we're walking in the mall on our lunch break and we're going past Dillard's and the shirt was on clearance and we get it. Those little things. There are some people who have a budget for themselves for just shopping. They give themselves a budget for the week of how much money they're going to spend within that 1 week. And if they go past that budget, no more spending. Mm-hmm. So those small things that we forget about, because lunch, we think about the bills, the phone bill, the mortgage, the rent, but it's those little things that we do not think about that sometimes eating away at the money that we actually have.
And should our retirement and savings and all of that be a part of that budget too?
Yes, because especially if you're just trying to start a saving. Now, some of your retirements can come from your employer or if you have an IRA or some form. But if someone is actually trying to just start saving, that should be part of your budget too, because you should tell yourself, I don't care if it's $5. every pay period, I'm going to put $5 in my savings. Or every 2 weeks, I'm going to put this in my savings, especially if you're trying to establish a savings account.
And do we really have to have 6 months worth of savings? I mean, everything I read is like you have to have 6 months worth of savings in order to feel, I guess, comfortable should something happen.
Most people really do try to have at least 6 months of savings in case of that emergency. But for your individuals or for our communities that's trying to just start out, just trying to figure out, how do I save? Can I really save? It can be 3 months. It can be between 3 or 6 months. But for that person who's trying to start out, you don't want to scare them and say you have to have 6 months, and then they may say, well, man, forget about it. I'm trying to get to this point. So I would tell my clients or my customers who I'm working with, let's set a goal to try to at least start saving up 3 months of savings. Or even someone may be, let's try to start saving 2 months of savings. Let's just try to get to that point.
Okay, so Christy, if we sit down, we write down how much we have coming in, we write down how much we have going out, and if the going out is greater than the coming in, how are we supposed to save?
We're supposed to save by cutting back on some things. That's where the eye opener is. When you write it down, and for most people who have your traditional bankings where you can have your online banking, that's very easy. Print your online banking statements out, because that's where, what's that thing that get us in trouble? That debit card. That debit card, we will swipe at 7-Eleven for $1 on that debit card. But you will see it on your bank statement. And that's where you can take that pen or that highlighter and go through all of those transactions that's not bills. And you will see that you spent $200, $300, $150, whatever it may be a month.
Wow.
On things outside of your expenses that you already have. That's your savings right there.
So then you just redirect.
Exactly.
That. So suppose you are in a relationship, your husband and wife, one's a saver, one isn't, or even worse, you're both spenders. How do you rein that in? What kind of conversation do you need to have with someone?
For the most part, and sadly, it usually comes when something happens. Because when everything is going and you're making it and you pay the bill and you pay the bill here, it's all fine. But when something happened or a bill or you notice, okay, I had $200 in the account. Why do I only have $60 right now? Or something like that. That's when you will come together. Now, if you're both spenders, someone has to be the individual and say, we don't want to be in a situation to where if an emergency happens, we can't take care of it. Or if the tire goes flat, or if you have children, something at school happens, someone has to say, we have to kind of get this on track. And that's when you have that conversation and you're compassionate and sensitive to each other, that's when you go ahead and put that plan in place.
Is that a conversation people should have before they even get married?
Yes. That conversation, the credit conversation, in a sensitive and compassionate way, but you really should have that conversation. See how your mate feels about credit. See what that background in their family history on feeling about credit, on a budget. Because most people are only acting out what they're used to. And if we were never educated on how a budget works, or if we're never educated on even how credit works, and credit right now is being used for so many different things besides just trying to get a service or a product, it's really important. But if you don't know, you don't know. And that's where the education comes in.
So do you think that in terms of the African American community as a whole, is that one of our issues because we look at money differently?
Exactly. We really, really do. And I can speak from my experience. I was looking at money differently until I saw, okay, I need to have this in place. And especially after my divorce, I was like, it's just me now. So I have to make sure I have a savings in place. I have to make sure that I have my credit in order in case an emergency comes up. But that saving was the most important thing. I need to have that savings to where you never know what can happen. Like I said, a tire goes flat. Just the simple things that we don't think about. We wake up, we get ready for work, we go outside, there's a nail in the tire.
And if you don't have the money,
And
then
if you
what are
don't have the
gonna do?
money, exactly what's going to happen.
440-2665 or 1-800-940-2240. What are your credit questions? What are your questions about trying to get your finances in order? Christy's here to answer your questions. 440-2665 or 1-800-940-2240. Now, you're from New Orleans.
Yes.
And you got caught up in Katrina. And that also was an eye opener for you in terms of budgeting. Is that and finances in
Yes.
general?
I was living in Florida when Katrina hit. And my mother, my sister, my family, they of course had to leave like most people. And unfortunately, they could not go back. My mom's home was 5 feet of water, was completely destroyed, but they had to basically start over. And what I saw from most people, not just my family, but it was something that no one expected. Of course, we all thought we're going to go back home. But when you don't have the income saved up or the income coming in or even a savings, that can be a real trying time. And that right there opened up my eyes to where we have to really educate our community on just as something as simple as savings. Just as something simple as when your pay is coming in, put some money aside just in case. And most people always say that just in case. And unfortunately, that did not happen for a lot of people. Now, though, a lot of people are more smart with their money. They're thinking about a savings. They're thinking about, if a hurricane happens. Some people even have emergency accounts set aside just for that reason. Some people may have just an emergency credit card aside that they do not touch just for that reason, to where if you have to get a hotel or rent a car, or if Hampton Roads say we have to leave now because the storm is coming, you can be able to charge a hotel room until that insurance money come in to pay everything off. And then that's what discipline comes in too. When you get that insurance money back, whether it's your renters or homeowners, you take care of what you had to spend on your card.
So you have to be very cautious on both sides. 440-2665 or 1-800-940-2240. Where are you with your credit? Have you had an issue where your credit's been compromised? Give us a call. Let's talk about it. 440-2665 or 1-800-940-2240. So where is the savings account a normal savings account with the bank? Is that where your savings should go?
Yes, you can have a normal savings. You hear people say, I have my own savings account, whether it's at home or in a sock drawer. But yes, you can go to a traditional bank or a credit union. If you're a member, if you're able to become a member and just open up a savings account. Most savings accounts, you can open them up with as little as $100. Some can even be $50. But they're very easy to start.
Okay, so we have our budget and we looked at our numbers. We figured out where we can cut back in order to start saving. Now let's talk about those credit cards. So one of the questions that we had in our production meeting this morning was the whole idea of people constantly getting offers from credit card companies that say, if you roll over your balance, you can get 0% for 6 months or for a year or whatever the amount is. What happens if you don't read the fine print?
The fine print can show that after that 6 months or a year, that interest rate can skyrocket up to like 23, 24%.
Wow.
And if you're not reading that fine print, and this is once again knowing your budget, knowing what's going in and what has to come out, if you can really take care of that within that time frame.
So the whole idea of rolling over to a zero balance is to pay off
exactly
that amount, the amount that you owe within that 6 months.
Because you're rolling it from a credit card that already probably has an interest rate that you're struggling with. So the idea is to roll it over to be able to pay it off. But the ideal is to be able to pay it off, because you have to know what's going to happen once that time frame ends. And like I said, if you know you can't take care of it within that time frame of the zero interest, then don't
What about
that.
those companies that say, we can help you get out of debt, we can help you end your credit card debt, we can stop the phone calls from coming, etc. We find ourselves getting caught up in those types of deals a lot, don't we?
Yes, and what I'm realizing too is that a lot of people in our community are not aware that we have right here in Hampton Roads services and organizations that can help them with credit counseling to show them how, by putting a strategic plan in place, the same money that you're giving those companies that's saying we can take care of your credit, and once you call, there's a fee of a couple of $100, and then you're paying them an amount every month. That money right there, you can pay off some of your debt. Because the truth is, what I've found, most people, when we pull their credit and we're reviewing it, it's not as bad as they think it is.
Really?
Really. Most people are not even, when's the last time someone actually reviewed their credit report to see what's on it? Some bills could actually be in collections that's like $35, $45. And the individual may say, I could have taken care of that, but I didn't know it was there. When's the last time you actually reviewed your credit report to see what's on there? So now you've paid a company that you saw on TV or you heard on the radio, like I said, a couple of $100 to even start the administration fee. And then you're paying them every month to take care of these bills that you can take care of with that money you were giving away.
So you can do this on your own.
Yes.
Is the bottom line.
And if you feel that you can't do it on your own, you have organizations like the Urban League where we are offering, free services to help you with your budgeting, credit counseling, preparing for home ownership. And we actually go over your credit report with you, and we put a plan with you together, an action plan to show you how you can take care of these items that's on your credit report. And for the most part, it's so overwhelming. Think about it. You have work, you have your life, you may have your children, and then you're trying to figure this out. And then you're trying to look at a report that you may not even understand or know how to read. And everything is overwhelming. But then when you come to someone who can help you, like a credit counselor or a service counselor who can sit down and say, we just have to take care of this right here. They're like,
yeah, because then they see that it's not,
yes,
not as overwhelming.
It's not as overwhelming as I thought. I have someone that's going to be going through this journey with me and going to show me how we can take care of this strategically. Because you can look at your credit report and just say, which one do I tackle first? But if you have someone helping you, an expert, it can be a whole lot easier for you.
What about medical bills? Is that another area where people find themselves in trouble?
Yes, medical bills. And for the most part, what I have noticed is that sometimes we just overlook them, or sometimes we even think the insurance company has taken care of it.
The rest of it that
yes,
has to be paid.
And then we completely forget about that part. And then unfortunately, they go on your credit report as a collection, and it's a medical bill. And it's a medical bill for $75 sometimes, or it's a medical bill for like $125.
So if you find these smaller amounts like that that are on your credit report, once you paid them off and they are removed, how much does that help improve your credit score?
Now, when you pay off, say, a medical bill in collections, it's not going to come off. It's going to stay on your credit, but it's going to say paid. And once that company who was reporting it to the credit bureau reports that it's paid and is updated, your score then will increase.
So what's the goal? Where should our credit score be, and what does that mean in terms of how we're able to gather new credit or buy a house or a car or whatever? What's the big deal about having a decent credit score?
The big deal about having a decent credit score is it shows the creditor or the businesses that's your character. They're showing that you're responsible, you can pay your bills, you're on time with your bills. For the most part, it depends on if you're looking to buy a home. Most mortgages, most people who are going to be giving you a loan for a home, they want you to have like a credit score of 640, sometimes 620, but 640 and higher. And that's really not, you can make that happen just by taking care of certain items on your credit. And then once they're taken care of, paying your bills on time.
So it's got to be more than paying off things. It also has to be paying the bills on time.
Exactly. You cannot be, late on your credit card bills. You can't be late on your car note. You can't be late on anything that's on your credit, because once you're 30 days late, and some creditors are now, reporting even before 30 days late. So if your car note is due on the 5th, paid on the 5th, even though I know some places will give you that grace period, but let's try not to wait all the way to the end of the grace period to pay it. If it's due on the 5th, pay it on the 5th, because that's what's going to be reporting for you. And that's what constantly keeps reporting for you, that good credit. And that's what you want. So you want to, be in the mid-range 600s, and everyone is different, but for home ownership, you definitely want to be there. And everyone's goal should be in that high 600s. Some people have, they want that goal of 700 and 800, and I am not upset with them by all means, because when you have that, it's so much more, you get better interest rates.
That's what I was going to ask you. So what that means that you don't pay as much to borrow. Is
Exactly.
that right?
Exactly. The bank is not looking at you as a risk, because you have, even if you have the 650, the 660, if you have the 700s, you will get a better interest rate on your mortgage. You will get a better interest rate on your credit card. You will also get one for your car.
Is it better to pay your credit card in full every month?
You honestly should. If you're able to, you really, really should, because then there's no interest. So you pay that bill. If you have your credit card bill and the balance is 200 or the balance is one something, and that's the balance, go ahead and pay it off and let it sit at zero.
And try not to use it again.
Exactly. Exactly.
440-2665 or 1-800-940-2240. What questions do you have for Christy about your budget? What are you struggling with in terms of trying to get back on track? So, Christy, is there a point where things are just so bad that you should file bankruptcy? And if you do, what do you need to consider if you think that that's the route that you should go?
If someone is thinking, if they feel is getting to that point to where they think this really may be an option, that's when you go and you see a counselor. And like I said, you can come to the Urban League before you go and you actually make that decision. Because for most folks, it may feel that, okay, this is the only option I have. But when you sit down with someone and go over your bills and your budget and your income and what's coming in, someone can help you see that, you really don't have to go this route.
But it does take discipline.
It does. And that's where I was going to say holding someone accountable, being held accountable, having that discipline, that's when that's going to come into play. Because it just means you have to change some things around. You have to stop spending. You have to make some sacrifices. Take the discipline and just pay off the bills and take your time with them.
So there are some people who are responsible for other family members, or friends who they'll loan money to, or they'll borrow money from, and so forth. Good idea, bad idea?
I would say it depends on where you are financially. We can't help someone else if we're not doing well. And I know sometimes that's a hard pill to swallow when someone really feels, I have to help this family member. And sometimes they really feel that, like, I have to help this family member. And when we're working with our clients, we take our time to be compassionate to that, but to say and to put it back on them and have them think, where are you financially though? How's your savings? Because if you're giving all of your money away and you're trying to take care of yourself and pay your bills, what's going to happen to you if an emergency happens? Now, I do feel and I believe that when you get to that point to where you can be a blessing to someone or your family or take care of them, yes, then we are supposed to.
And I've heard people say you should never loan money. You should never expect to get it back. Should you, or should you write out a contract? Should you?
Oh no.
Should you do any of that?
Some people do. I would not. And like I said, if you're fortunate to be a blessing to a family member who needs it, or a friend, and you're actually able to, meaning your bills are going to be paid on time, your savings is in place, and everything else, then yes, you are supposed to, and that's something that you automatically do.
Got you. If you're just joining us, we're talking about fixing our finances with financial expert and Urban League Housing Program Manager Christy Hunt. 440-2665 or 1-800-940-2240. Tom joins us from Newport News. Hi, Tom. You're on the air.
Hi, thank you. Very important program you got here.
Thank you.
I wanted to make a point, though, and we're talking about money and big banks. One of the things I want to say is that the banks have to abide by the rules, too. You want to make sure if you got debt and you're getting called to try to negotiate with them. Sometimes these are paid off. You can say, hey, I'll pay it off, but I want it off the credit report. And then the other part is if they're bugging you, if they're calling too much, there's consumer protection rights and laws. You can talk to people and try to get that sorted out so that, you can make something happen. And sometimes, if they're breaking the law, they need to be held accountable too.
Okay, good point, Tom. Thanks for the call. We appreciate that. Is there a point where because that does become very nerve-wracking, and there's some people who are getting calls from everywhere, which probably also may make them make maybe not such a smart decision about trying to fix their finances because they're getting all this pressure from folks.
Exactly. So what you would want to do is that if you do not know how to handle that, like, for example, Tom seems to know that you have those rights to say that. Most people, and especially our community, may not even know that you are allowed to say, let's put together a payment plan, or right now I cannot give you the amount that you're asking for, but I can give you $5 a month, or I can give you $10 a month. For the most part, when they're calling, they want to know what's going on. And for sometimes, unfortunately, either we're ignoring the phone calls or we're trying to avoid it because we do have so much of stuff going on. But if we just talk to them and work out something with them, like Tom was saying, negotiate, they really will negotiate with you.
So it is better than to talk to them and not ignore the call?
Yes.
Because I know a lot of people. Now, so what happens when you ignore it? Then they keep putting bad things on your credit report.
Exactly. Because that's not going to go away, especially if it's something that you did. If it's something that you're disputing that was not your debt, or something that the creditor on their side never took care of and they don't respond, that's something different. But if it's something that you did, or you maxed up that credit card, or you were late on that car note, or something that should be there, then you have to take care of it. And then I would say deal with it, and contact them before they contact you. Before that month comes if what's going to happen with your car note, or with your mortgage, or with your bill. That's when you call and you say, this month I'm having some small issues, or I'm having a little bit of trouble. Can we work something out? And they will work it out with you.
So, Christy, should you prioritize your bills in terms of, like, no matter what, the mortgage gets paid, no matter what, the car note gets paid, et cetera? And how do you do that?
It's funny you said that, because just this week I was sitting down and I literally went and I wrote down every single bill that we have. And I started with
the financial expert actually has to follow her own advice, huh?
Exactly. I went with our bills that I know, our fixed bills every month.
Every month. Gas,
the
electric, mortgage,
light bill, car, all of those. And then I went to our gas, groceries, entertainment, eating out. Then I went to our credit cards and I wrote all of those out. And I went there so I can put down the dates that everything is due. So no matter where I am, if I'm traveling, I don't have to wait for that envelope to come in the mail that say so-and-so is due now. And that's the ones that I know. That's not like my mortgage. I know that stays the same every month. But just to know when those bills are due, so no matter where I am, if I'm traveling, I know this bill is due. I go on my cell phone or on my tablet and I make that payment. But yes, you should automatically know that your mortgage has to get paid. If you have an HOA fee, it has to be paid. Your car note, your car insurance, your light bill. And then you move to your credit cards, and then you move to your, like I said, your gas, your entertainment, your food.
Your entertainment and all that really is more your discretionary.
Exactly.
And that one probably gets moved around the most in terms of how you take care of the other things.
Exactly. And those are, to be honest, sometimes the ones that may get us in the most trouble because that's where the money's going. And that's where you have to stop back and say, okay, no eating out this month or no shopping this month because I spent that much money, at Starbucks or someone like that.
Got you. 440-2665 or 1-800-940-2240 are the numbers to call if you have a question for Christy about your finances. So I was talking with our producer, Lisa Godley. She's got a daughter in college and another one going to college in the fall. Colleges are always sending these credit cards to students. How do we teach our kids? First of all, when should we start educating our children financially about finances? And then secondly, how do we keep our young adults from getting themselves into so much credit card debt before they even get a chance to get out and get a job?
By the first question, when we start young, I mean, we can start young because we can get them excited about it. Most banks have minor savings accounts. And you can get them excited. I know when I was little, it was the piggy bank, and it was my mom really got like this cute little pig from the drugstore with this thing underneath that you
That's
pop
right. You can pop open to get the money out
and get the money out. But nowadays, you can actually bring your children to the bank with their allowance and show them how
and you should
works.
give them an allowance so that they can learn how to manage money.
Exactly. And when they have their allowance, they go to the bank and then they make a deposit and they can see how a deposit slip is kind of. Now, they probably don't really understand, but just getting it in their mind young. Because then they're going to grow up and there's going to be something that's second nature to them. When they get their first job at Wendy's or McDonald's, they're going to know I have to put some money away to start saving. But we also have to lead by example. Because when
they watch us.
Exactly. So when they see the household, when they see, mom or both parents seeing that, credit is important and understanding credit and talking about credit, that's going to stick with them. So when they do go off to college, they're going to know that, okay, you can offer me this credit card now, but I also know in the future I need credit for home. I need credit for this. Even if they get the student loans, they can be more aware of how many student loans I get. Do I really need this many student loans? Because I eventually have to pay this back. And I have to make sure that I'm able to pay this back. So I can't get myself into the debt now, even if it's just enticing. They're just that table is there and you can do this and this. If they really have the education from early on, they're really going to understand how it works. And it really is just understanding how it works.
440-2665 or 1-800-940-2240. Nellie joins us from Norfolk. Speaking of student loans. Hi, Nellie. You're on the air.
Hi, how you all doing
today?
How you doing?
Well, interesting, my question. Well, this is about a student loan, right? And for 2002, I went to college and I had my bachelor degree and then another AS associate. And I found out that I took $2,000. The state of Virginia said that after 6 years, 5, you don't have to pay it. I just need counseling in that because has been more than 10 years, and they sent me a letter that I own $30,000. How could be this?
Have you called them?
They well, I knew about that because they took my tax refund taxes. I mean, they just took $400.
But have you called the student loan people to find out exactly what it is that you owe and so forth? Because you need that information, I would assume, Christy, right?
Exactly, yes, because that was the first thing I was going to say. Have she reached out to the student loans company, whoever it is that she may have, to see exactly how much she owes and exactly what's going on with the loan? Because that's really where it all has to start.
Right.
Well, they sent me a letter that is $30,000.
Well, but even if they sent you the letter that is $30,000, that's even more reason why you need to call them so that you can talk with someone directly about, because you said the loan started out at $2,000?
Yeah, it's $2,000. It's only $2,000 in 2002.
Okay. Yeah, I would suggest, or Christy, you make the suggestion as the expert.
I definitely would say on that letter, if there's a phone number, and most likely it is, call them and talk to them about and see exactly what's going on. The questions that you have right here, you have to address to them so they can explain to you to see exactly why, if this loan started in 2002, correct me if I'm wrong, at 2000, that now is at 30,000. You definitely have to see what's going on with it.
And then hopefully be able to work something out
Exactly.
with them. Okay, Nellie, thanks so much for the call. We appreciate it. So we were talking about the students getting the credit cards and so forth. They do have to pay those back. I mean, the people, for some reason, don't think that they have to pay it back.
That is the big thing. Yes, when you get credit, you have to pay it back.
440-2665 or 1-800-940-2240. Teresa joins us from Newport News. Hi, Teresa. You're on the air.
Hi. How
Hi.
are you all doing today?
How you
Okay.
doing?
I want to say thank you to all your guests and for having this show. All right, Ms. Hamley, I wanted your presenter to share her thoughts on this. I called a dealership, for the bank, on a car loan and said, okay, my husband lost his job, and I know I'm not going to be able to make the payment next month, and what can I do? And they said, well, you have to wait until the 30 days are up until you don't make the payment, and then you can apply for some kind of crisis or something like that. And then they have to decide if you are, if they accept you for that, or if they approve you for that. And I just thought that was the strangest thing. I mean, I'm trying to tell you ahead of time what's going on. So if you could, give me some feedback as to why they do that, as well as the same thing with a credit card. I had a problem with a credit card and told them the same thing. And they said, well, we have to apply this if we're going to give you a lower interest rate to pay it off. And I just, okay. Well, anyway, let me let her share on that.
Okay. All right, Teresa, thanks so much for the call. Sounds like would she need to go higher? Maybe she's starting at an entry level or at the front end
Yes.
of the negotiation.
And I also would say, if it's with a particular bank that she's able to go to here, like if she has a banker, she can actually go into the bank, especially with that being an auto loan, if I'm not mistaken.
Yeah,
she
it's
said
an auto loan.
loan. She can actually go in with them to sit down, because then that banker can call that department and start working with her on her behalf to see exactly how they can get that fixed. If for some reason that that does not work, or her bank or financial institution is out of state and she's getting, I would say, the runaround, once again, the nonprofits here in the area, like the Urban League, can actually help her with that.
So she could call the Urban League.
Yes.
What's the phone number for the Urban League?
The phone number for the Urban League is 757-627-0864.
Okay. So she would be able to take care of that. So but she brings up a good point. She was trying to be proactive because her husband lost his job. If we find ourselves in that type of a situation, is that what we should do, is to call ahead of time and say, hey, look, we've had this major life change and this is what's happening?
She actually did the right thing. Unfortunately, I don't know why it went the way it went, but that's exactly what you should do.
Okay. All right. 440-2665 or 1-800-940-2240. Judy joins us from Portsmouth. Hi, Judy. You're on the air.
Hi, Judy. Hi. I have a different kind of a question.
Okay.
I'll be 80 years old next year.
Congratulations.
I know, right? Congratulations.
And I have about $175,000 in stocks and bonds, mostly stocks. But it's taken more than it's at least $1,000 a month extra that it's taken, and a lot of times it's more than that, several thousand. Plus, I give my church about $10,000 a year. I don't know I don't know how to set up a budget to work on this kind of thing. And I would guess the people you've been talking about that could go to somebody to help you are people that are just starting out, whereas I'm at the other end.
Is there someone that could help her to
Yes, I was going to
out?
say, with her savings that she have, her investment accounts, she should have someone that's assigned to her investment account, whoever it may be with. She needs to contact that individual. It should be her advisor, and they can actually help her within that area work out a budget with what they have with her to where she can see what's going on with it.
Does that make sense to you, Judy? In other words, whoever you're investing with, they have counselors, they have advisors there, and they should be able to help you to achieve the goals that you want to achieve.
And she should be in touch with them as well, whether it's once a month or once a quarter. She should be in touch with her advisor, knowing what's going on with this money and helping her to be able to utilize it in a better way.
Okay?
Okay.
All right. Thanks so much for the call. We appreciate that. We've got the phones ringing off the hook here. Let's go to Patricia in Hampton. Hi, Patricia. You're on the air.
Thank you for taking my call. Your program is very interesting and timely for me. I work with students that are adults, young adults to people in their late 50s in a special federal grant for SNAP recipients. And what I've seen is a lot of my clients have had part-time jobs or they're making minimum wage and they live paycheck to paycheck, and they're right on the edge of homelessness, some of them. And the problem is, how do you talk to people without embarrassing them about, coming up with a plan for how to live? Because we're hoping that when they finish their vocational training, they'll be making a living wage with benefits. But in the meantime, they've got to go through the training, and this is where they're right. It's very difficult for them, and it causes them a lot of stress.
Okay. This is where you were talking about the compassion. Maybe you can help Patricia with some thoughts on how to talk to those students.
Yes, I was getting ready to say, one, you have compassion. You are also transparent. For the most part, for us who are in the industry, whether we're housing counselors or financial coaches, they think sometimes we have it all together, that we don't follow a budget or we may not be having some issues. But you have to be transparent and let them know that you understand. That's also where the one-on-one counseling comes in, because sometimes for the most part, when you're trying to do something like financial literacy in a group, it can be embarrassing because everyone is hearing how everyone's, I can't save or so on and so forth. But when you have a one-on-one counseling session with them, and like you said, you take it back to the basics and you take time and you understand where they're coming from and show them how we can do this together by putting together an action plan, it can be done. But you have to be patient and compassionate and take your time with them.
Okay. Thanks so much for the call, Patricia. We appreciate it. We've only got 2.5 minutes left in this segment. I cannot believe this time has gone by so quickly. But I want to ask you, what is your advice then for people, no matter where they are? It doesn't matter whether they think that they're completely financially fit or they're on life support, as I say. Everybody should review their finances. How often, and what should they do to get started?
Everyone should actually do, we would say, a financial checkup once a year. Okay. Depending on where you are, I would even say once a month. Because especially if you're trying to put that budget in place or you're trying to save. Some people who have, like the caller who called in already, may have their investment accounts and they got things going. You really want to do that once a year. Get with your advisor, get with your bank, see what your rates are, call your insurance company, see if you can get a better deal on your car insurance, all of those different things. But when you're starting out and you don't know which way to go, I would say once a month. Check your bank statements because once again, we're using that debit card. It's showing us exactly how much money in a month we're actually spending. Mm-hmm. And then we can see exactly how much money we can save. We can also see if we have too many bills. If we're living beyond our means to where we have to cut something, we may unfortunately have to cut that cable bill. Mm-hmm. But everything that you may have to cut or say no to is not going to be forever. Mm-hmm. And that's one thing I always want to give people. It may be a little bit discomfort now, but think about how great it's going to feel when you know your credit score is where you want it to be.
One thing we did not talk about, we literally have 1 minute left, and that was tithing.
Yes. Giving back.
And that should be a part of your budget too.
A part of your budget. That should be a part of everyone's budget when you're tithing. You have to give back that 10%. And not so just tithing to your church. You also want to give back and be a blessing to your community as well. You definitely want to do that.
Okay. Christy Hunt, financial expert and also housing program manager for the Urban League of Southampton Roads. 30 seconds. I know you have 2 events coming up. You've got the Changing Lives Breakfast. When is it?
Yes, we got the Changing Lives Breakfast on the Peninsula, which is going to be May the 18th. That's a Thursday at 8 a.m.
Okay.
And then we also have our Whitney M. Young Awards Dinner. That's going to be June 1st at the Chesapeake Conference Center. They can go to the Urban League's website, www.ulhr.org, get the information, and register.
Okay, and give us the phone number one more time.
That phone number again is 757-627-0864.
Okay, thank you, Christy, and we'll be right back.
I'm with Marcellus, and you all are checking out Another View. Don't go anywhere. Check us out.
And welcome back. I'm excited to tell you about a new WHRO podcast that is designed to help you navigate through those socially awkward and uncomfortable situations. It's called Mind Over Manners, and it's hosted by Another View producer Lisa Godley and WHRV morning announcer Sandra Woodward. You're about to hear a portion of the first episode, which tackles workplace romances with special guest and good friend of Another View, Virginia's relationship coach, Alvian Lyons.
So our first question to you is, do you think workplace romance is ever a good idea?
Well, okay, what I will say is this, that there is no perfect environment to meet your partner. Because of the nature in which we live, many of us spend a lot of time in the workplace, which limits your dating pool significantly and increases the likelihood that you will build romantic relationship of some sort, certainly intimate, and I don't necessarily mean physically intimate, but certainly intimate relationship with people that you're with a lot. So while it can be a little dicey sometimes, because if the relationship doesn't work out, what does that mean for you with someone that you're going to see every day in your work environment? That's the bigger issue. Am I prepared to leave that environment that means so much to my livelihood or my happiness because of this one particular element? So I can't say that you should never have any kind of workplace relationships, because for most people, if you're working 40 to 60 hours a week, where are you going to meet someone? But I can say that there are different complexities that come with dating somebody inside of the workplace, especially when things don't work out. And unfortunately, we have more relationships, more statistically, that don't work out than those that do. The other thing you need to be very mindful of in a work environment is whether or not there's going to be issues in terms of fraternization. Are there policies associated? Are you familiar with what those policies may be? Could they compromise things professionally for you? All of that makes a difference, because if you are that person's superior, that is a whole nother complexity of issues, because was the bonus really by virtue of the fact that you were a great employee?
Or that you were just great.
Or that you were just great. You know, people start to wonder. Then you, on the other hand, the person who is working very hard, who may really have earned the respect and certainly the compensation that is associated with the respect, will feel funny about the fact that now my capabilities, my credentials are being questioned by virtue of the fact that I have a relationship. So now something that I've worked very hard for that superseded the relationship is now being questioned by virtue of the relationship. So there are multiple factors that are involved when you decide to bring that into the workplace. If you work for a huge company and your departments are completely unrelated, besides the fact that you may see each other on occasion throughout the day, there's no question about what your role is and what the other person's role is. Those are a bit safer, assuming we're not having policy issues where the company is concerned.
Right.
But it can get very messy. We will actually risk things that are very important for something that feels good. because everybody wants to feel appreciated, loved, attracted to, gosh, even craved for that matter. We all desire companionship. And if I have to spend half of my life, if not more, inside the workplace, how nice would it be to have somebody that you look forward to seeing each day? But once you've already started those feelings, imagine trying to stuff those back in a box after you discover that this could cost you your job. So what I would say is, to the best of your ability, try to know as much as you can about the safety of those kinds of things before you've already opened up Pandora's box and the feelings are already out there.
Suppose that's already happened. Idris Elba came. He's the new director of production at WHRV.
In all his gorgeousness.
and Lisa and I are no longer friends because we're fighting over him. Right, exactly.
And how are we supposed to conduct ourselves? Are we supposed to have a conversation like, okay, do we pretend we don't know each other at work? How do we conduct ourselves at this point?
It is totally appropriate for you to be friendly at work without being romantic at work. We all have technology. So I could be sitting in a meeting and you're in the meeting with me. We're both supposed to be paying attention. And I slide a little text message to you to tell you how hot you are right this second. And I'm working very hard to pay attention to what it is that Jim is saying in this meeting that is going 2 hours longer than it was supposed to go. But my comfort is that your sexy self is right here. So there are things that we can do that allow for a level of connectivity that does not have to interfere with the climate and tenor of the environment.
Gotcha.
Okay, so it goes south. This goes so wrong. What do you do then?
Yeah. Workplace romance requires a level of maturity that a lot of times we don't have. And the maturity that's going to be necessary if it doesn't work out, that's when it's a bigger issue. When you take romance into the workplace, you are actually building a business proposition. How are we going to navigate this space if this thing does not go the way that we plan for it to? What will be the rules that are going to govern this? And those rules may require some changes in things. Normally, we used to go to lunch at this place together. Let's both agree that we won't bring our next partners into this space where we see each other a lot. But, this just to give it time for us to kind of work through the emotion of it all. Once the emotion dies down, it's not such a big deal to see your ex. The problem's when it's still raw for you. Think long and hard before you get into these workplace romances, especially with somebody that you have to work intimately with.
But it comes down to being proactive.
Absolutely. Absolutely. What we do going in has a lot to do with what's going to happen coming out. Relationships that work are relationships with good foundations. Those good foundations are built by communication. We're all happy to communicate about the easy stuff. It's the tough stuff we try to avoid.
You know what? If you've got somebody, too, that you can have that conversation with and they agree to it, that's probably a keeper.
Probably. Or certainly somebody that you're more likely to still be friends with when it's all done. Because just because something doesn't work out doesn't mean that we can't be friends or that we can't have a positive relationship. Hey, we were just not each other's forever. And that's totally okay. But it's how we handle the realities of those things that make a huge difference in terms of both of our comforts post-relationship.
This has been Mind Over Manners. You can find us on Facebook at Mind Over Manners, on Twitter at MOMWHRO, and online at WHRV.org/Mind Over Manners.
And next week, Mind Over Manners tackles what to do when you're stopped by police. If you want to know more about the podcast, send your questions to mindovermanners@WHRV.org. And congratulations to Lisa and Sandra for an awesome podcast. Next time on Another View, the Another View Roundtable, the National Urban League just released its State of the Black America report, and we will examine the results. Our theme music was composed and performed by Jay Sennett. Lisa Godley is our show producer. Our audio engineer, Victor Bowman, is on vacation, so special thanks to Todd Washburn for filling in. And Jada Baden, congratulations. She's graduating cum laude from Hampton University. She answered our phones today. I'm Barbara Hamley. Thank you so very much for listening to Another View.